Good evening, welcome to Market Matters. I'm Khoo Hsu Chuang and I'm joined by Waylon, Tang and Charlotte Chong. Guys, an up day in the market. Actually, the market spent most of the day in black territory, but it ended up just about 3 points higher.
It's been actually up for the last few days, Chong. So I think I read some reports today, right? So analysts are saying that the FPM KLCI might actually trend higher in the near term. There are some positive catalysts on the local front. For example, I think Valuecap is said to be entering the market sooner than expected.
Yeah, but the fifth day of gains in a row, isn't it?
So you're right, Waylon. Just now I look at HRIB report. They said in a report this morning that FPM KLCI may trend higher in near term because of their fading expectation that Fed would actually raise rates by the end of this year, and speculation of Valuecap 20 billion going into the market soon, and potential inflows of foreign funds because of the strengthening of ringgit. Now, US dollar versus ringgit was at 4.22 when I last checked. KLCI actually hit its intraday high of 1,701, actually went beyond 1,700 points today. It closed 3 points higher, 0.17% to 1,692 points today. Volume was at about 2.29 billion shares, value 2.69 billion ringgit. Now, Afin Huang also came out with a report saying that currency movement will likely to remain volatile in near term, and they think that by the end of this year, ringgit will range between 3.9 and 3.95 against the US dollar.
What does that mean, 3.9, 3.95?
Well, I think it just means it's better from here on in. But it's quite amazing because the last 5 days, we've seen the index gain about 100 points. It's the fifth day of gains in a row. And it's just amazing because that gain has come on the back of Janet Yellen's comments that there's going to be no rate rise in October and probably not in December as well. So everybody's, I guess all the money is moving back to emerging markets.
And you always have to theory that when the ringgit does strengthen again, right? All this will actually affect USD-based companies. I mean,
correct.
Companies which actually are exposed in terms of their sales exposure in USD.
How fickle markets
and
are.
also moving to the regional market, the region was bracing for a resumption of trading after a week-long holiday in the Chinese markets. Shanghai Composite Index up 2.97%, CSI 100 Index added 2.44%. Back to you guys.
Okay, so that's a wrap for markets. Let's look on some hot stocks, and we've got Genetec Technology Bhd. This is a company we've talked about in the past. It's been highlighted with a negative momentum 2 days ago. But this is, although it ended up unchanged on the day, 17.5 cent unchanged, pretty heavy volume, 33 million shares. But this stock has been up 12% in the last 4 days and 19% up in the last 5 days.
Yeah, even I think Chong back in 2 days ago, I think volume was quite heavy. So on the news front, yesterday, this company Genetech announced that it's actually got new orders worth 26 million ringgit. Now recall that 2 days ago, we actually spoke about the new orders it got back in June. That was about 27 million ringgit. So if you add this 26 and 27 million ringgit, you're talking about 53 million ringgit worth of new orders in just the past 3-4 months.
Yeah, I think what's happening is most of the orders have been driven by the hard disk drive sector. And this company, of course, they don't make hard disk drives, they make precision component parts for the hard disk drive sector. But not only that, but the automotive sector as well, and as well as industrial equipment, stuff like that. The managing director, he's a pretty interesting guy because his name Chin, he was actually involved, he has been involved in hard disk drives since he graduated from university about 1 million years ago, actually about 25 years ago. He's about my age, right?
But it's good that you did the check on the management though.
That's
to
right.
see how this sort of correlates to
Yeah, and these guys are hard disk drive experts. So basically, this basically means that it's very good for the company from a financial perspective. It's obviously going to be very good. As you say, in the first quarter, they made 4.5 million ringgit net profit. That's more than all of last year.
That's right. But if you look at the past few years, net profit has been rather choppy. So yes, about 4-ish million ringgit, the latest financial year 2015. 2014, net profit was at about 7 million ringgit. And before that, I think, I don't know, year on year, it's rather choppy. So these new orders would be good for them.
It's in line with the whole cyclicality of the electronics industry. 3 years ago, they lost some money, and they've been bouncing back since then. It's all over the place. But what is interesting is it could be a turnaround story. As you say, the net profit has been quite choppy the last few years, Waylon.
Just to pull out one quick one from the annual report, I just actually printed it out. So quoting the chairman, right, he said that the positive factors such as the growth in automotive market, coupled with yield process improvement projects from the HDD, the hard disk segment, so he's actually confident of performance in this coming financial year.
So to bring it all home, in short, basically Genetech is the contract maker of industrial equipment for the hard disk drive sector. They're up 12% in 4 days and 19% in the last 5 days. It's basically probably due to the follow-through buying from the announcements of new orders worth 27 million ringgit in June, and they're basically making it for the hard disk drive sector. And I recalled it in Q1 of this year, actually, the first quarter for the financial year ended March 2016. They made 4.5 million ringgit in net profit, more than all of last year. They made 4.46 million all of last year. So They're going to be reporting Q2 earnings in a couple of weeks' time. We'll be watching for that. Let's move on to some stocks with momentum, and Luxchem is in view. This is a stock which closed 3% higher to 159. Fantastic little stock, by the way. It's 1 year, it's been up 135%, and in the year to date, it's up by 93%, okay? And the interesting thing is this is an industrial chemicals maker, Waylon, and what they do is they got a 40% stranglehold on the local chemicals market, and they've been making money hand over fist.
And recently, because of their increase in capacity, about 50%, this has actually translated to its earnings. So if you have a quick look at the second quarter, right, net profit was up 107%, it's almost double. Revenue was up 4.9%. So it's a clear case of margin expansion here. Increase in capacity, increase in margins, demand is there. And I mean, even Kenanga in the report today, it said it has actually added Luxchem into its growth and dividend portfolio. It has a trading buy call at a fair value of RM1.85 per share, Chong.
Yeah, just to flesh it out, I think what happened was with that plant in Malacca, they actually increased production capacity by 50%. But that is probably going to result in net profit on a quarterly basis doubling. So as you say, margin expansion, they're probably getting quite good at what they do. And don't forget, this is quite a good and transformative story for Luxchem, because in the last 5 years, they've averaged between 19 and 22 million ringgit in net profit annually. But on an annualized basis for Luxchem this year, they're probably going to double that number. And that's why the shares are going gangbusters.
So if you were to show on a chart, net profit year on year has been like that, but this is going to be like that.
Yeah, exactly.
Okay.
So
right.
I guess part of the reason why they've been flying as well is because they're involved in what is known as the unsaturated polyester resin market, which in normal terms is the chemical market, right? And it's not just the local market in which they've got a 40% market share leading. There's also the Chinese market, which is driving growth. There's also the Japanese market, which is driving growth.
Half of its earnings actually is derived from the defensive rubber glove industry. So you could say that as all these industries like rubber gloves, they do better, the demand for the industrial chemicals provided by Luxchem will also be more.
Yeah, so Kenanga, of course, like the stock, there's a dividend yield there on an average basis of between 4 and 5%.
Net cash as well, actually.
Net cash. We love net cash. Fantastic.
In these times especially. But even Inter-Pacific actually in a quick report, October 1st is initiated with a buy call as well, about RM1.65. So I mean, it's a small company, but it's coming up in the analyst radar right now because of its resilience.
Of course. So to bring it all home, Luxchem is a local market leader in industrial chemicals. Their shares have doubled in the last 12 months. They're profiting from strong growth in the unsaturated polyester resin market. Number two, this financial year ended March 2016. It's going to be quite transformative for them with a 50% production step up in Malacca, enabling them to see a profit doubling, and that's going to be the first time in 5 years they do that. Then thirdly, Kenanga loves the stock. There's a fair value of RM1.85 per share for them. That's a potential 17% upside from current levels. And that still values Luxchem at only 12.5 times earnings, estimated earnings, and that's in line with the small cap index average.